Welcome to the deep dive. Today, we're looking at Bitcoin exposure.
Yeah, it's really changed, hasn't it?
Definitely. It's
Oh,
not just, buying Bitcoin directly anymore. There are quite a few ways to get involved now.
that's right. And well, the landscape is diversifying pretty fast.
So our mission today, let's call it that, is to really unpack the three main ways people are doing this.
Exactly. We want to understand the trade-offs. We're talking direct Bitcoin ownership, Bitcoin spot ETFs, and MicroStrategy stock.
Okay, let's start with the sort of classic way. Direct ownership. What's the core idea?
Well, it's simple, really. You buy a Bitcoin and it's yours. You hold the private keys.
The private keys, right, like the ultimate password.
Essentially, yeah. They give you control over your Bitcoin, no intermediaries.
So you're completely in the driver's seat. What's the main upside there?
The biggest benefit is definitely that independence, total sovereignty over your assets.
And no third party needed.
Nope. Plus, you get that censorship resistance Bitcoin is known for. You can send it anywhere, anytime, peer-to-peer. No permission needed.
Okay. So who's this really for then? Who finds this approach the most appealing?
I'd say it's for those who really value that digital autonomy, people
Okay.
who understand the tech or are willing to learn and are okay with the responsibility.
The responsibility of keeping those keys safe, you mean?
Precisely. It's crucial.
Makes sense.
Yeah.
Okay, moving on. Bitcoin spot ETFs. They've made a huge splash recently.
Oh, absolutely. They've definitely changed the game for accessibility.
How do they work fundamentally?
Think of it like this. The ETF provider buys and holds actual Bitcoin. You, as an investor, buy shares in that ETF.
So each share represents a little piece of the Bitcoin they hold.
Exactly. And the ETF's share price is designed to track the price of Bitcoin very closely, minus, small fees.
So the big advantage here is convenience.
Right.
No need to worry about storing private keys yourself.
That's the main draw for many, yes. It just slots into existing financial systems much more easily.
And they're regulated.
They are. They operate under standard financial regulations, which gives some investors a level of comfort. It fits neatly into traditional brokerage accounts.
Any other benefits?
Well, you generally get institutional-grade security looking after the underlying Bitcoin, and the tracking error tends to be quite low.
Right. Okay, let's talk about the third option. MicroStrategy, the company, MSTR stock. It's a bit different.
Very different, yeah. It's not a direct Bitcoin play in the same way.
What's their connection? How does buying their stock give you Bitcoin exposure?
So MicroStrategy, the company, decided strategically to buy and hold a lot of Bitcoin on its balance sheet.
A huge amount, right?
A massive amount. And they've often used debt to finance those purchases.
Okay, so how does that affect the stock price?
Because their Bitcoin holdings are so significant relative to the company's size, the stock price tends to move quite strongly with Bitcoin's price, often with more volatility, actually. It provides amplified exposure.
Amplified, so bigger swings up and down.
Potentially, yes. And a key point is accessibility. You can buy MSTR stock through any standard brokerage account. That's a big deal in places where maybe buying crypto directly is difficult or restricted.
But it's crucial to remember you're not just betting on Bitcoin, are you?
Absolutely not. You're investing in MicroStrategy, the business. You're exposed to their corporate strategy, management decisions, execution risk.
And things like potential stock dilution if they issue more shares.
Exactly. Those company-specific factors are definitely part of the equation. It's a more speculative approach, really. You're bullish on Bitcoin and on MicroStrategy's strategy itself.
Okay, so we've got these three distinct avenues. Direct keys, regulated ETFs, and this leveraged stock play with MicroStrategy.
Yeah, and each one strikes a different balance, doesn't it?
Seems like it. A balance between control, convenience, regulation, risk.
Precisely. Direct ownership gives you max control, but demands responsibility. ETFs offer ease and regulation, but you rely on a custodian.
And MicroStrategy gives that amplified, easy access exposure, but with added company risk.
Spot on. There's no single best way. It really boils down to what you, the listener, are looking for. What are your goals? What's your risk tolerance?
Some people might even combine them.
It's possible, sure. Some sources suggest diversifying your approach could make sense depending on your specific situation and how you view the different risks and benefits.
So as Bitcoin keeps evolving, it's worth thinking hard about those personal priorities. Control versus convenience. Regulation versus maybe decentralization. Risk appetite.
That's the key takeaway. Figure out where you stand on those things, and that'll guide you toward the exposure method or methods that make the most sense for you.
Great stuff. Really helpful to break it down like that. Thanks for joining this deep dive.